welcome to Debt Free in 30, the show where every week we talk to industry experts about debt, money, and personal finance. I'm Doug Hoyes. Today we've got a bit of a different show for you. Our typical show, I have a guest on, we explore one or two topic areas in a lot of detail. Today we're going to do something a little bit different and go through a number of different questions. It's going to be our first frequently asked questions show. I've picked out a lot of the questions that we are typically asked, and we're going to go through them one by one. And this will probably become a regular feature on the show. We'll probably do it around the last show of every month. So here's the first show, and my guest today to help me through it is Ian Martin, who is a Chartered Accountant and a Trustee in Bankruptcy here at Hoyes Michalos. Ian, how are you doing today?
Very well, Doug. How are you?
I'm doing great. Thanks for being with me. Let's get started with the first question, which is a bit of a question I think this is a question people don't grasp until they come in to meet with us. So my question is, does the time of year matter when you're considering filing either a consumer proposal or a bankruptcy? In other words, does it matter if I file in January or the summer or the end of the year? What say you?
Well, the honest answer is yes. For many people, it does make a difference. And when you're first meeting with a trustee, that's maybe not the foremost concern on your mind, but usually the trustee will, in talking about the situation, help you to understand those considerations. If it is a consideration, it usually ties back to the expectations for your income taxes and whether or not you expect to have a refund or a balance owing. So if you, what I'd like to do is just kind of walk you through the considerations.
Okay, so let's break it down piece by piece here. So let's talk about filing bankruptcy.
Right.
And you said taxes are a big issue. So why is that? Give us the real quick overview. How do taxes work in a personal bankruptcy?
Right. Okay. So if you've met with the trustee and you've decided that bankruptcy is the right answer, then you would have been told that in filing bankruptcy for that particular calendar year, the year in which the bankruptcy is filed, you will not receive your tax refund if there is one. However, that will also apply if when the bankruptcy is filed, or let's say there's a prior calendar year or maybe more than that, the tax return isn't filed when the bankruptcy is filed. So in that situation, you would lose the refunds for all those years.
Okay, so let's pretend that today is January the 30th.
Right.
And let's say it's January 30th, 2015, just to have a number in our heads. I haven't filed my taxes yet for 2014, last year.
Right, like most people, right?
Because I don't even have my T4 slip. My boss doesn't give me my T4 slip till the end of February. So I haven't filed them for 2014 yet.
Right. So in that scenario, if you proceeded to file bankruptcy in January 2015 without having done your 2014 taxes, you would lose those 2 years of refunds because it's the 15 is the year of bankruptcy, and then there's a prior year outstanding when the bankruptcy is filed. So for most people, that would be a common consideration. And if that is the case, what people would normally choose to do is basically get their 2014 taxes filed before bankruptcy is filed, understanding there's still the 1 year that is at risk, but they want to limit it to 1 year.
Okay, so if you go bankrupt, you are going to lose your tax refund for the year you file bankruptcy. That's the rule.
Right.
That's how it works.
Black and white, that's the way it is.
It's real simple.
Yeah.
So if I go bankrupt in 2015, I lose my 2015 tax return. And this is where people get confused, I think, because your 2015 tax return, you're not actually going to file until 2016.
That is correct. And you're right. That's a lot of confusion for people. So I make sure it's very crystal clear when I'm going through this consideration with people.
That we explain what years we're talking about.
Correct.
Okay, so if I go bankrupt, I lose my tax return for the year I'm in and for any years I haven't yet filed. So if I didn't do my taxes last year or the year before, I'm going to lose those as well. So from a planning point, back to my original question, does it matter when you file bankruptcy in terms of the time of the year? Pull it all together for us then.
Right.
So a guy comes in, it's let's say the end of January or it's in February. He hasn't filed last year's taxes. So your advice to him is what?
Well, the common choice that people would make would be to delay in filing bankruptcy, get the prior year taxes for the 2014 taxes filed, have the refund in hand, and at that point, then proceed to file bankruptcy so that they're limiting the lost refunds to the 1 year, the year in which the bankruptcy is filed.
So that's a pretty key point then, that if I wait a few weeks when you're at the beginning of the year, get last year's taxes filed, and it's not just having it filed, obviously, you actually have to have the refund in hand.
Right.
So you sign up for direct deposit. That's how most people get their refund. It plops into your
right.
your
And,
bank
and if you're
account.
one of the go-getters who's getting your return filed early in the new year, then it's usually processed very, very quickly by Canada Revenue.
Because they're not doing anything else.
Correct.
The
Correct.
boom hasn't hit yet. So now I think this is, again, a key point, because what we haven't talked about is the way trustees get paid. A trustee gets paid a percentage of the money that's in the pot at the end of the bankruptcy. The more that's there, the more the trustee is getting paid.
That's correct.
So as a trustee, it is in my own interest for you not to file your taxes for last year. I would like there to be 2 years worth of tax refunds, not one, because that will give me more money at the end of the day. You're kind of giving us an insider tip here, which is, yeah, well, that's exactly right. So your trustee may not tell you that you can just wait. They may say, nope, go ahead, let's get it filed and let's get on with it.
Right, and people might perceive that as a conflict of interest, but I find it's just better service to be open with people so that there's no surprises.
Makes sense. So, okay, so if you're filing a bankruptcy, you don't want to file in the month of January if you're expecting a tax refund, because you're probably going to lose 2 years tax refunds instead of just one.
Right, and I'll just flip that just a little bit differently as well. Like, let's say it's late in the calendar year. Let's say you're meeting with the trustee in December instead of January, so that you don't find yourself in that situation where you might delay until February or March to file. It might make sense to make sure the bankruptcy is filed before the end of the calendar year, so that that's the year that's at risk. So you would have already filed the old year back in March or April. So in that situation, you're still limiting it to 1 year of tax refunds without delaying the process of getting the bankruptcy started by a couple months potentially.
So you file bankruptcy in November, December, so you're only losing that year.
Correct.
Or you wait until, let's say, March of the following year, and that way, again, you're only losing 1 year. Now, obviously,
Precisely, yeah.
If your wages are being garnished, you have to do the math. Does it make sense to wait 2 months, have my wages garnished 2 months, so I can get my $100 tax refund? You're going to want to figure out how big is my tax refund. I assume if you owe money to the government, well, it doesn't really
Well, that's
matter.
exactly what I was going to say. Like, if you normally have a small refund or even a balance owing, then these time considerations aren't really applicable if you're focusing on bankruptcy.
Okay, so we talked about bankruptcy. Now, what about a consumer proposal? Is it the same answer with a consumer proposal, or is it different?
It's tax related, but not exactly the same. And the reason for that is that one of the key distinctions with a bankruptcy and a proposal is that in a proposal, you keep your tax refunds. The only exception to that would be if there was maybe taxes owing from a prior year where the government has a right of offset. But fundamentally, if you do a proposal, the refund money is not paid into the proposal, like we just talked about, where it is in a bankruptcy.
Because the whole concept of a proposal is I keep all my stuff.
Precisely. So with a proposal, it's still tax driven, but it's more considering if you normally have a balance owing on your taxes. So let's change the scenario. Let's say I'm meeting with somebody relatively late in a particular calendar year, and taxes are at least a significant part of the issue. And furthermore, they're expecting to have more tax debts that are part of that calendar year. In doing a proposal, the taxes from the year in which the proposal is filed are not automatically included in the proposal. There are ways to include special provisions within the terms of the proposal to have that included as well, but you need to have the explicit agreement of Canada Revenue, and they don't always give that. So the risk there is that you file a proposal in, say, October or November of a particular year. It deals with taxes from all the prior calendar years, but within a few months when you do the taxes from that year in which the proposal is filed, like bam, you're whacked with another tax debt that isn't part of the proposal, and then it doesn't really feel like much of a fresh start because you have your proposal payment to deal with the old debts, but still struggling with this new tax debt that isn't captured by the proposal.
So very key point there then, a proposal will automatically include your tax debt up to the end of whatever the last tax year was.
That is complete, correct.
That is complete. And tax years in Canada, if you're a normal working guy, end on December 31st.
Right, calendar year.
Calendar year. It's based on the calendar year. So if I do a proposal on January the 2nd, 2015, my 2014 taxes owing are automatically included.
Right, that's precisely the point I was going to make, that if possible, if there's not a wage garnishee or like really hard collection activity that is going to happen, it makes sense to delay the filing of the proposal to the new calendar year so that any tax debts from the prior year are automatically dealt with through the proposal.
Gotcha. So if I file my proposal on December the 29th, any taxes I end up owing for that year are not going to be automatically included. If I wait a few days and file my proposal on January the 5th, then all the taxes from last year are automatically included, whether or not I filed my taxes yet. Obviously, by January 5th, I probably haven't. So, okay, so the answer to the question then, if we can sum it up, in a proposal, if you owe money, you want to file early in the year. In a bankruptcy, if you owe money, doesn't really matter, file any time. In a bankruptcy, if you're getting a refund, you want to file either towards the end of a year, so you're only losing 1 year, or you want to file after you've filed your taxes for the year, which means you're probably filing March, April, or later.
I think that's an apt summary, Doug.
Perfect. Okay. So that was our first question. We went into a bit more detail on that, but that's good. I think that's a key question. We've got about a minute and a half here to do one more question. This is one we get asked all the time. Who will find out if I go bankrupt?
It is a very common question. It's an emotional process to file bankruptcy. It's normal that people will be concerned about that. So I'll give you kind of my textbook answer and then some practical considerations. So the textbook answer is that, filing bankruptcy means that you've met with a trustee. There's different government forms that outline your statement of affairs that are filed with the government. So the government obviously knows through the filing process. But then the trustee also has to tell your creditors that you filed bankruptcy as well. And that's also positive because that means they update their records and stop any kind of collection activity. So that's the textbook answer, Doug, that the government needs to know to get the process started and your creditors need to know, but that's all positive.
Okay, and I think in a real quick summary of that is your bankruptcy filing or your consumer proposal filing will appear on your credit report. It will stay there for a period of time. A consumer proposal generally stays for 3 years after the proposal's finished. A first-time bankruptcy generally stays for 6 years, could be 7 years after the bankruptcy's finished. So anybody who has the ability to check your credit report is going to find out about your bankruptcy. But otherwise, in a normal bankruptcy or proposal, we're not putting an ad in the paper. We're not telling anyone else other than the people who need to know, the people who you owe money to, the government, and anyone who's going to check your credit report. I appreciate that, Ian. Thanks for being here on Frequently Asked Questions, show number 1. Thanks for being with me. We're back on our Frequently Asked Questions episode, and I'm joined again by Howard Hoyes. Howard happens to be our firm's expert on immigration issues and bankruptcy, so that's what we're going to talk about in this final segment. So, Howard, I'm guessing based on your accent, you weren't born in Canada. Is that right?
That's right, yeah. I'm from Lincolnshire in the UK.
Oh, yes, Lincolnshire. I have no idea where that is. But
if you're looking at a map of England, you're probably about a 3-hour drive north of London.
So in the middle of nowhere,
in the middle
I guess,
of nowhere.
is where it is. Perfect.
Yeah.
Now, you are now a Canadian citizen. Is that correct?
That's correct.
Okay, so you've gone through the whole citizenship process. You know what's involved, which is probably why you're our expert on citizenship here. So...
Yeah, that's right. Actually, when I went through the immigration citizenship process, I remember one day I was filling out an application form and there was a question on there about have you been bankrupt? Now, obviously, because I work in the bankruptcy industry, that perked my interest and I started to question, well, why would that be on the application form? So everything stemmed from there, really, in terms of my interest in looking into what these rules are with how a financial problem can potentially impact your ability to be able to move to Canada and sponsor someone to move to Canada.
And you've done some writing on that, and I'll put a link in the show notes to both the government's resources and some of the stuff you've written. You can see that at hoyes.com on our website. So tell me the story then. The common question we would get asked is, I'm a Canadian and I want to sponsor my mother, my father, my brother, my spouse, some other family member, my spouse to come to Canada. So what happens if I have debts? Does it matter? Do debts prevent me from sponsoring someone? How does that all work?
I think, first of all, the first thing to look at is there is a difference between the immigration process and the citizenship process. As far as I'm aware, and by the way, I would also say that before you make any decisions, always refer to the Citizenship and Immigration website for up-to-date information.
That's a good piece of advice, because we're not immigration lawyers. We're not telling you how to do any of that, and the rules could change by the minute, so make sure you know what you're talking about.
As of today, my best understanding is we're looking at this difference between immigration and citizenship. Immigration is the right to be able to come and live in Canada. Citizenship is that you become a citizen of this country, so you're entitled to a passport. You can vote in the country. As far as I'm aware, there's no restriction on a citizenship application. So whether you've got debts or not, if you're applying to be a citizen, that's not taken into account. It's the immigration aspect of being a permanent resident, sponsoring someone to be a permanent resident. That's where these issues of debts potentially come into it.
And that's really the key. It's if I'm sponsoring someone. So as far as we know, and again, we're not immigration lawyers, so if you're listening to this from outside of the country and you want to immigrate to Canada, we're not the guys to talk to about how that process works. We're not experts in it. What you're saying is, well, if I owe some money to Visa in the U.S., Visa's a bad example because that means two different things. So I got a bank loan in the U.S. and I want to come to Canada. Fine, that's not going to be the big issue. The issue is if I am a Canadian and I want to sponsor someone to come in, then there are a bunch of things that I can't have showing up on my record in order to have someone come in.
That's right. When you're sponsoring someone, you're essentially taking on a financial responsibility and commitment to the person that you're trying to sponsor to come into Canada. Part of the reason for that is because if the government's going to allow this person to come into Canada, they don't want that person to be a burden to the existing taxpayers of Canada. That they don't want someone to just walk into the country and immediately be claiming benefits and social assistance because they have no job, no prospects, no support network of family and friends that's going to help provide for that person's needs when they arrive in the country.
So run me down the list then. Let's assume I'm the person who is sponsoring someone to come into Canada. What types of financial issues can I not have? What's going to disqualify that?
So there's a couple of restrictions then. So if you, one for example is support. Let's say you owe child support and you're in arrears with the support. You cannot sponsor someone whilst you've got those arrears. A second would be if you've had, let's say you've previously sponsored someone and that person had to claim benefits because they couldn't find a job. Then until those benefits are repaid back to the government, again, you cannot sponsor a second person. If you borrowed money previously on an immigration loan, now this is very rare. Immigration loans are very rare. What an immigration loan would be is, let's say again, if you're sponsoring someone and you need help with the cost of actually physically getting that person from Europe or Africa, wherever they're coming from, Asia, you need the cost of the plane ticket. Well, the government will help you with that cost sometimes. They will say, well, here's a bunch of money you can use for the airfare to get that person here. If you haven't repaid that loan, again, you can't sponsor someone else to come until that loan's been repaid.
And what about bankruptcy?
So bankruptcy, if you've declared a bankruptcy and you haven't been discharged from the bankruptcy, again, you cannot sponsor someone until you've completed the process of being bankrupt.
So that's really the key point then. If you are bankrupt right now, you cannot sponsor someone to come into the country.
Correct. As soon as the bankruptcy is finished, you can continue with your application to sponsor
So once
someone.
you're discharged, then you can. So I guess the message, the answer to the question for everyone listening today is if you have a bunch of debts now and you also in the future want to be sponsoring someone to come into the country, then you've either got to deal with your debts now and then you can sponsor them. But you don't want to sponsor them and then declare bankruptcy in the middle of that process because that could certainly muck up the whole process. If you think you're going to have to go bankrupt, I guess you want to do the bankruptcy, get it finished before the sponsorship process starts.
I guess the third option there would be is that you go through the whole sponsorship process and then deal with the debt. But that's probably a much riskier strategy because the whole sponsorship process, from my experience, is going to take at least a couple of years. And that's a long time to not be dealing with your debt.
Yeah, it's not a quick process. So
a question we often get is, well, what if I do have the debts though, and I really need to sponsor my mum or my brother or my aunt to come to this country and I need, for some reason, we need to get that done right away. What are my options? What can I do? Rather than going bankrupt, you could look at offering the creditors a proposal.
Because in the rules, as we read them, it does not say, have you declared a consumer proposal?
Correct.
It just says, have you declared bankruptcy?
Exactly. So
that's a key point. So I guess the message for everyone listening is if you are going to be sponsoring someone and if you have debts, you better come in and talk to us or someone like us up front because there are a bunch of different options. You can deal with your debts, you can do the bankruptcy and then start the process, you can do a consumer proposal, but you don't want to get caught in the middle of it because that can really mess things up.
That's right.
Great. Thanks very much, Howard. You're listening to Debt Free in 30.
You're listening to Debt Free in 30. Here's your host, Doug Hoyes.
Welcome back. It's time for the 30-second recap of what we discussed today. Today was our first frequently asked questions show, and my first guest was Ian Martin, a chartered accountant and bankruptcy trustee, who told us that timing matters if you're considering a consumer proposal or personal bankruptcy. Ian also walked us through who will find out if you go bankrupt. In the second segment, my guest was Howard Hoyes, also a bankruptcy trustee, who gave us some great practical advice on how to sponsor someone to immigrate to Canada, even if you're having debt problems. That's the 30-second recap of what we discussed today. So, what's my take on what Ian and Howard had to say? Obviously, I'm biased, but I think there's an obvious message here, and that's that you want to deal with a reputable trustee. Trustees get paid based on the money in the pot at the end of the bankruptcy. So a trustee gets paid more if they get 2 years' worth of your tax refunds instead of just one. A trustee is happy if you go bankrupt in January or February before you receive last year's tax refund because they get 2 years' worth of refunds. They get paid less if you've already filed last year's taxes. So if your trustee didn't mention to you that timing matters, you may not be dealing with someone who is looking out for your best interests. That's our show for today. We'll be doing a frequently asked questions show every month, so if you have a question you want answered on the show, email us at dfi30@hoyes.com. That's dfi30@hoyes.com. Full show notes with links to everything we talked about today are available on our website at hoyes.com. That's HOYES.com. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.